What's going on, everybody, and welcome back to yet another video. In today's video, I want to explain how you can grow a small futures trading account. But real quick, as always, if you guys do find value in this video, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. But without further ado, let's hop into the video. All right, so the very first thing that I want you guys to keep in mind is if you are trading futures with a small trading account, you do not want to trade ES and you do not want to trade NQ. Reason being, every single 1 point on ES is going to equate to $50. So if you're trading on a small trading account and you lose 5 points and you're trading ES, you're going to lose 250 bucks. You're likely going to blow your account very quickly. Now, as far as NQ, that is $20 per point. And NQ can very quickly move 30, 40, 50, 60 points. So if you start doing the math, very easy to blow an account, especially if you are trading with a small account. So instead of trading ES or NQ, what you want to focus on is MES, which is going to be the micro ES futures. This is going to equate to $5 per point instead of 50. So if you lost 4 points, you would only lose $20 compared to 4 points on ES where you would lose 200. And instead of NQ, you would want to focus on MNQ, which is going to be $2 per point instead of 20. Now, this is going to be a lot more realistic, especially if you are trading with a small account. So again, focus on MES and MNQ. Now, when it comes to actually looking for trades on these two names, there's three main ways that I find key levels in the market: supply and demand, Fibonacci, as well as support and resistance. If you want to learn more about my supply and demand strategy, I have multiple videos on my channel. I will be leaving those links down in the description. And then as far as Fibonacci, I have an entire 1-hour video showing you how to use it. So I will be leaving that down in the description as well. So when you are finding these key levels, supply and demand, Fibonacci, as well as support and resistance, you mainly want to find them off of the higher time frames. So the way that I go about this every single morning is I'll start on a daily time frame, find any key levels. When I'm done on the daily, I'll then break it down to a 4-hour time frame. Same thing, look for any key levels. After a 4-hour, I'll go to a 2-hour, then a 1-hour, then a 30-minute. Now, the reason why you want to prioritize the higher time frames is because when price comes to these key levels based off the higher time frame, you're going to get a larger reaction, and that's honestly where you are going to see the highest amount of accuracy when it comes to your trades. Because think of it like this: if you were trading a 5-minute time frame and you base the trade off of a 5-minute setup, there's only so much that trade is going to move in your favor. But if you're taking a trade based off of a 4-hour level and you simply break it down to a smaller time frame and snipe an entry, you're going to get a lot larger of a move. But because it's a higher time frame, you're going to get faked out a lot less in the market compared to smaller time frames where the setups tend to fake you out a lot more. So again, base your setups off of these higher time frames. But when price comes down to the level, you simply then want to break it down to a 5-minute or a 2-minute time frame. Now, what we're looking for when price comes down to the key levels on the 5-minute or 2-minute is any bullish or bearish reaction off of the level. So let's just say, for example, on MNQ today, we ended up having support at this 20060. So let's just go ahead and let's replay this right here, and let's actually just go to a 15-minute time frame because this did actually give a really good setup earlier. So say we're looking for price to come down into our level, and I do have a bunch of videos that is going to explain what I'm about to talk about here. But say we had a support level right here, we have a move down into it, but we have this very long lower wick and an elevation of volume. This is exactly what I am looking for every single time price trades to my key levels, whether it be to the upside and we have this as far as a resistance, or to the downside as far as a bounce level. And real quick, in case you guys did not know, I do have 2 books on Amazon breaking down my entire day trading and swing trading strategy. My first book, The New Age of Technical Analysis, gives you an overview of the entire market, how to understand where the market's going to go next, so all the indicators I use, a lot about my swing trading strategy, and so much more, which is why it's 450 pages. So again, The New Age of Technical Analysis on Amazon. And then my second book, going over my entire day trading strategy, my Fibonacci trading strategy, the intraday indicators I use, the intraday setups I look for, and so much more. Again, The New Age of Day Trading, 320 pages. If you guys want to check out both of those books, I will be leaving those down in the description. So again, in this example, price comes down to the support level. This to me is actually very bullish because this was a key level. And the way that I am reading this volume right here is a majority of the volume actually started coming down here from the buyers at this key level right here. So as soon as I see this at one of my key levels, that then would confirm a long entry for me. I would simply go ahead and look for a long. And because you're trading MNQ, you can start looking at this and say, okay, well, my stop loss is right below this lower wick right here. As far as your position size, it's really up to you and how large your account is. So if you can't afford to lose $150, then you would want to go with one NQ in this example. Or if you can't even afford to lose the $75, then you simply would not be taking this trade. Again, with a small account, you have to have really good risk management. And if you start calculating the math in your head and you can't accept the risk, then you got to move on to a different trade and look for a different setup. So in this scenario, because this is support, and we did get confirming price action, my stop loss would be right below here. Now, if you do the math and you understand, okay, I'm willing to lose $150 on this trade, you then want to at least be looking to make a 1-to-1 risk to reward. So you have to at least be willing to make $150 on this trade for it to make sense. Now, sometimes you're not going to get that. It really depends on the price action, but overall, most of the time, you want to at least be looking for a 1-to-1 risk to reward. Now I'm just going to move this higher. Honestly, I forget what the market ended up even doing. I don't know why it ended up selling it, but let's just go ahead and get back into this. Stop loss right below here. Again, negative 150. Let's just go ahead to the next candle and boom, you can see right away that you're up about $259 just based off of this 15-minute candle right here. So now, depending on how many contracts you're trading when it comes to the futures, if you are trading two, what I highly suggest is whenever you end up hitting your price target or you want to trim one, pop one of your positions off. So let's just go ahead and sell one. Now in this scenario, you already locked in, it was what, $129.50 on this candle right here. There is no reason that your stop loss should still be in the negative. So what you're going to do is you're now going to move your stop loss up to at least break even or even in profit, depending on the technicals. And at this point, it's like, how much money am I going to make today? And that is the best scenario that you want to be in, especially as a small account. Because if you're going to grow that small account, you need to learn to let your winners run. We don't know how much this thing could end up moving. It could move all the way back up into this high point right over here, which actually would end up being what? $340 profit. Let's just actually put this up here. But hopefully you guys are picking up on what I'm trying to say. Let's just see what happens. Price continues to go up a little more, and then it stops you out in profits on that candle right there. But that's exactly what I would be looking to do, especially trading with a small account. So look for a higher time frame setup, again, using key levels, supply and demand, Fibonacci, support and resistance, or however else you want to find key levels. Wait for price to trade up or down into that key level. And then from there, you need to have confirmation before you take the trade. If you do not get confirmation, you do not take the trade. And honestly, that's where I see a lot of people go wrong, is they'll simply just enter the trade just because price hits their level. And I'll tell you what, most of the time that is not going to work. You always need to look for confirmation. So typically I am waiting for a candle close to give me the confirmation. Reason being, again, we can use this example right here. Say we have support right here at 57.58 on the MES futures. Price comes down, it hits it. We're about 2.5 minutes into the candle. We're like, well, this looks pretty bullish. Let's go ahead and get a buy. There's still 2.5 minutes left in that candle before it closes. Anything could happen. And trust me, I've seen it so many times. I've been in it many times where halfway through the candle, it might confirm our trade, but by the end of the candle, it does not confirm the trade and actually ends up stopping you out. So instead of taking that unnecessary loss, do yourself a favor, wait for the candle to actually close. And once you actually get the candle close with the confirmation, that is when you take the trade. No confirmation, no trade. So once you're getting the confirmation, then very quickly, as the candle is obviously developing and you're about to get the confirmation, start understanding, okay, what is my risk in this trade? Am I willing to lose 4 points? Am I willing to lose 10 points? Because you're going to have to position differently for every single trade. Because not every trader you're going to be willing to lose 4 points. Sometimes you might only end up risking 2 points. Well, if that's the case, your risk is smaller, you could take a larger size. And what I mean by that is, let's just say we're willing to lose 5 points on MES, that's $25. Let's say we can afford to buy 4 of those. So if the stop loss was hit, that would be a $100 loss. Well, now let's say you end up chasing the trade a little bit and your risk is actually 10 points. Well, that's a $50 loss per contract. And if that was the case, you could only take 2. So really, depending on your entry is what's going to help you understand, okay, this is what my position size should be. It's not going to be the same every time. It always depends on what is your risk. So once you get the confirmation, you understand your risk, you position correctly, and you're in the trade, Again, you want to at least be looking for a 1-to-1 risk to reward. Sometimes you're not going to get it, really depending on the overall price action in the market. There might be some early signs to get out of the trade before it goes against you, but ideally you are looking for a 1-to-1 risk to reward. So if you're willing to lose 5 points, you want to at least be willing to make 5 points. Now, if you have multiple contracts, what you can do is when you hit your 1-to-1 risk to reward, or maybe it goes a little higher, take some of your position off, move your stop loss up. Say it continues in your favor, take a little bit more off, move your stop loss up higher, and really just get a feel for the overall market to help you understand, okay, now is a good time to trim. Now is a good time to move my stop loss up, because regardless in the market, we never know how much the trade is going to move in our favor. All we know is what is our initial risk. So yeah, to sum up everything in this video, focus on MES, MNQ, trade key levels, break it down to a smaller time frame to snipe an entry, understand your risk, position correctly, and look for at least a 1-to-1 risk to reward, if not more. But if you guys did find value in this video, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. Everybody have an amazing rest of your day, and I'll see you guys in the next video.